Hello guys, welcome back to my channel. Today I am describe about types of insurance. This article is written by Jack Jones. Insurance is an agreement spoken by an arrangement in which an individual of element gets money related security or repayment against misforms from an insurance agency. The organization pulls customers tenders to make installments more reasonable for the guaranteed. Protection arrangements are utilized to support against the danger of money related to misfortunes, both of all shapes and sizes that may come about because of harm to the guaranteed of our property, or from risk for harm and damage brought on out and consider. There are a huge number of various sorts and of protection and strategies accessible. For all intents and purposes, any people of organizations can discover an insurance agency willing to guarantee them at a cost. The most well-known sources of individual protection are auto, well-being and mortgage holders and extra security strategies. Most of the people in the United States have no less than one of these sorts protection. Organizations require exceptional sorts of protection arrangement that safeguards against particular sorts of dangers confronted by specific business. A fast food eatery, for instance, needs a strategy that spreads harm of damage that happens accordingly of cooking with a profound fire. A car merchant is not subject to this kind of hazard, but rather requires scope for harm or damage that could happen amid test types. There are additionally protection approaches accessible for particular needs. For example, abduct and emancipate and are medicinal, behavior and expert risk protection, likewise called mistakes oversights protection. Protection policy components. While picking an approach, it is imperative to see protection functions. Two of the most critical parts of all protection approaches is premium and deductible. A firm comprehension of these two ideas goes far to helping you pick up the strategy that best for you. An approach premium is just its cost, regularly communicated as a month to month cost. The premium is controlled by insurance agency in light of or your business hazard profile. For instance, in the event that you possess a few costly vehicles, a past filled with headless driving, you pay more for an auto strategy than somebody with a solitary, mid-exed car and immaculate record. In any case, unique backup plans may charge distinctive premiums for comparable arrangements. So finding the value that is ideal for you requires some legwork. The second critical strategy is deductible. At a whatever points you make claim, you are required to meet a base out of pocket cost or deductible before the insurance agency pays for your misfortunes. Deductible can apply per strategy and per guarantee contingents upon the strategy need provider and the sort of arrangement. Arrangement with high deductibles with very commonly less expensive on the grounds that high out of the pocket cost complies insurers are more adverse to make little claims. With regards medical coverage, for instance, individuals who have interminable medical problems or need normal therapeutic consideration ought to search strategies with lower deductibles. In spite of the fact the yearly premium is higher than similar strategy with a high deductible. Less expensive access to restorative care during the might be justified regardless of the exchange of. Insurance is an agreement between an individual, the policyholder, and the insurance agency. The agreement gives that the insurance agency will cover some bit of a policyholder's misfortune. The length of the policyholder meets certain conditions stipulated in the protection contract. The policyholder pays premium to get the protection scope. In the event the policyholder incurs a misfortune, for example, an auto collision and a house fire, a policyholder documents for repayment with the insurance agency. The policyholder will be deductible to cover some portion to the misfortune. You pay 1000 US dollar every year in premiums for an approach to face estimation of 2 lakh US dollar, which is the thing the insurance agency gauges it would cost to totally reconstruct your home in case of an great misfortunate. One day, an enormous rapidly spreading insurance agency. The organization favors the claim. You pay 1000 deductible US dollar and the insurance agency covers the rest of 190,000 US dollar, 1,90,000 US dollar of your misfortunate. You then take the cash and utilize it to the contractual workers to the modify your home. When you purchase the protection approach, you are pooling your misfortunate chance with the misfortune danger of uh, every other person who has bought protection from a several organization. On the off chance you get your mortgage holder protection from server firm, which offers significantly a large number of property holders protection approaches than any rivals, you are entitled with a great many different mortgage holders to altogether secure each other against the misfortune. Every mortgage holder pays yearly premiums. Server firm gathered more than 50 billion in premiums 2011. As per information, AM is based and noteworthy protection appraisals organization. Just a little rate of mortgage holders will encounter misfortunes every year. 5.3% of safeguard property holders recorded claim in 2014, for instance. What's more, a large proportion of those misfortunes will be generally little. The normal mortgage holders protection will be 11,402 US dollar in 2015, which is more than a great many people could easily pay out of the pocket alone. However, along with the most dire outcome imaginable, advanced ready mortgage holder just documents claim in 9 or 10 years. Insurance agencies are belong to the lines ready to utilize the premiums from mortgage holders who doesn't documents a claim and avoid offered here to pay for the misfortunes of property holders who do record to claim, which is called hazard pooling. In it just boards will to buy protection to cover huge misfortune, and you cannot without much of stretch and bear the cost of alone. Couple of drivers were bound to blame the noteworthy vendor to stand pay a huge number of dollars, and another person to visits expenses so they convey accident coverage and accommodates and restorative installments to their. We have a medical coverage on the grounds that the events we get a costly disease like malignancy and protection. The main way we had have the capacity to the pay for our treatment, and it doesn't bode well to buy protection where the cost scope is high to the point and you will be likely to wind up paying for whole potential misfortunate and the premium whether the encounter that misfortunate or not. Nor does protection board well when you can easily stand to cover misfortunate yourself, which is the reason specialist for the more part exert against protection strategies or service agreements or essential shoppers hardware like telephones and TVs. Insurance is accessible for burglary insurance and against a wide assortment of misfortunate auto body harm to file up, house fires, apartment robberies, medical installments to rehabilitants to harm up to the vendor, a long-term liability, the death of somebody that defend to the emergency room visits, surgery, a claim brought by Christ who sleeps was and antibiotic, help with essential exercise, day living, and some more. When you convey the correct source of the protection, your correct sums, you will be secured against the possibly disastrous misfortunes that could send your life bearing of kilter and pulverize your funds. In the following segment, you will clarify a couple of more essentials of protection, the distinct sorts of hazard, how to oversee them, and what a insurable intrigue is, why you require it, how to purchase protection, and how protection guaranteeing functions. That is in for today. Please like, comment, and share this video, and don't forget to subscribe my channel.